Welcome to the deep dive. Today we're diving into something really fundamental for business owners, but often pushed aside. It's this question: why should you actively think about your business valuation now, even if selling feels, way off in the distance?
It's a super common mindset, isn't it? Thinking, oh, valuation, that's for when I'm ready to sell. But, well, think about it like your health. You wouldn't wait until you're seriously ill to start checkups.
Right. You do preventative care.
Exactly. Understanding your business's value regularly lets you diagnose potential issues early. It helps build long-term health, long-term vitality for the company.
Precisely. So, our mission today really is to unpack why getting a regular handle on your business's worth isn't just about some future exit price. It's actually, a really powerful engine for growth, sustainable growth, and it's crucial for managing risk, too.
And for creating options.
Yeah, options you might not even see yet. So, think of it less like that final price tag.
And more like a dynamic scorecard, something that tracks your progress, your potential right now.
That scorecard idea is great. It makes me think of Peter Drucker. What gets measured gets managed.
Spot on. And if you're not measuring the value of your business consistently, well, how can you really manage it strategically? How do you make sure you're building an asset that's actually growing in worth over the long haul?
Okay, so let's dig a bit deeper into that. Imagine your business is like a high-performance car. You wouldn't wait until the last lap, maybe when the engine's sputtering, to check the oil or the temp or how much fuel you've got left, would you?
No, absolutely not. You'd be watching those dials constantly, making adjustments, checking performance throughout the race to make sure everything is optimal to increase your odds of winning.
And that's exactly the mindset shift we need for business valuation. It's not this one-off thing for the future.
No, it's an ongoing discipline, a leadership discipline, really.
Like checking your business's vital signs regularly. It lets you see how your strategies are actually hitting the bottom line, but also, the value line.
Right. And identify where you can make those strategic improvements.
So this idea of doing a valuation quarterly, maybe alongside your regular financial reviews, that starts to sound really practical.
It becomes a powerful habit. It builds in that consistent feedback loop. You get to see, okay, how did last quarter's decisions or market shifts actually impact the underlying enterprise value?
Okay, let's get specific then. What are the real tangible benefits of getting into that kind of rhythm, that recurring valuation?
Well, first off, it gives you and your leadership team a really clear scoreboard, one that goes beyond just revenue or profit.
Yeah.
It shows in real terms how the business is doing in terms of its overall worth.
Okay, a clearer scoreboard. What else?
Second, it gives you incredible visibility. You can actually see how operational changes like launching a new product or improving a process or entering a new market, how those things translate into real increases or maybe decreases in enterprise value.
So connecting the dots between actions and value.
Exactly. And maybe the most critical thing, it gives you that real-time understanding. Are we actually heading in the right direction? Is the strategy genuinely building a more valuable, more resilient business over time?
That kind of clarity feels like it would be incredibly useful. Now, something else that jumped out at me was this idea of an internal share price.
Mm.
You see, public companies, they're absolutely fixated on their stock price daily, right?
Constantly.
But for private business owners, it often feels like they're flying blind on that front until they actually decide to sell.
That's it exactly. And it's a huge missed opportunity. Just because you're not on the NYSE doesn't mean you can't or shouldn't establish your own internal benchmark.
So how does that work? An internal share price?
It's pretty straightforward, actually. You take your estimated total enterprise value
Mm-hmm.
and you divide it by the number of ownership units, or maybe even phantom shares if you use those.
Okay, got it. So you calculate this number. What's the real payoff? Why go through that exercise?
Oh, the advantages are significant. For starters, it creates a transparent, easy-to-understand benchmark, something the whole team can actually get behind. It gives everyone a common language for talking about long-term goals and progress.
Okay, alignment. That makes sense.
Second, you can then directly link performance, maybe incentives, to that goal of long-term value creation. So instead of just focusing on, say, quarterly sales targets,
Which can be short-term thinking.
right, you can reward initiatives that demonstrably build lasting value. And finally, it's just a really motivating, measurable way to talk about progress with your leadership team. It makes strategy less abstract. You have a number you can track, celebrate wins against, use to guide decisions. It's tangible.
Wow, yeah. That totally reframes valuation, doesn't it? It's not some dusty number for the future anymore. It
Exactly.
becomes a tool for right now, something you can actively manage, influence, and grow.
Precisely. And that just underlines why that quarterly focus is so key. It keeps the leadership team's eyes on the prize, building a business that appreciates in worth, not just one that gets bigger in terms of revenue.
Because you could have huge revenues.
But if they aren't translating into a more valuable, more sustainable, more attractive company in the long run, what's the point?
So that scoreboard we talked about, it's not just the P&L and balance sheet.
No, not at all.
It really needs to include these valuation metrics too. Enterprise value and this internal share price.
Absolutely. Those valuation numbers are critical indicators. They tell you if your overall strategy is actually working. They give you clues about whether the business is becoming more transferable, easier to potentially sell someday, more scalable, more resilient.
And I imagine the impact on the team's thinking when they know value is being tracked like that must be pretty significant.
Oh, it can be transformative, really. People start thinking differently. They prioritize process improvements, efficiency gains, because they see the direct link to making the company worth more.
They see the bigger picture.
Exactly. They understand why investing in leadership development or retaining top talent is so important. Because a strong team is a massive value driver. Fundamentally, they start adopting more of an owner's mindset. They see how their day-to-day work connects to the long-term success and value of the whole enterprise.
So when you boil it all down, the first step to making valuation part of your regular leadership rhythm, it sounds almost deceptively simple.
It is. Just start measuring it.
Just start.
Yeah. Get into that quarterly rhythm. Start tracking your estimated valuation. Calculate that internal share price. And then this is key. Make sure everyone on the team understands what actually drives value. What are those strategic levers that impact not just profit, but also that valuation multiple?
The things that make the business fundamentally more attractive, more solid.
Right. Because value, real significant value, it doesn't just happen by accident, does it?
No, definitely not.
It's built intentionally.
Yeah.
With focus.
Okay, let's flip the coin for a second. What are the real risks here? What happens if you just put off thinking about valuation until you're actually thinking about selling?
Well, here's the tough truth, maybe a bit uncomfortable. If you're not actively building value, you're basically leaving the door open for someone else to capture it. Potential buyers, savvy ones anyway, they're always looking for businesses that are, let's say, under-optimized.
Businesses with untapped potential.
Exactly. And when they find one, they'll likely offer a lower price because they know they'll have to do the work to unlock that value. Value that, frankly, you could have been building and benefiting from all along.
Ouch. That's like leaving money on the table. A lot of money, potentially.
It really is.
Yeah.
And look, this isn't just for people planning an exit soon. Even if selling isn't on your radar for years, if you're not actively working to boost your company's value, you could bet your competitors probably are.
Good point.
And that means you could be missing out on opportunities down the road. Opportunities to fully leverage the success you're building right now.
It kind of boils down to a really fundamental question, doesn't it? If you're going to put all the effort, all the time, all the resources into building a company,
Yeah.
why wouldn't you build it in the best way possible? Build it to maximize its actual worth.
Exactly my thought. Building lasting value.
Yeah.
That's arguably the smartest, most rewarding thing you can focus on as an owner. And the great thing is, when you focus on value creation, the benefits spread out. It's not just for the owner.
Right. It ripples outwards.
Yeah, your family benefits, gets more security, your employees, often a more stable job, maybe better opportunities. Your customers tend to get better products or services from a company that's thriving.
Even suppliers benefit.
Sure, stronger partnerships. And ultimately, building a really valuable business can even create a surplus. Room for more generosity, a bigger positive impact. It's a win-win-win.
So wrapping this up, the core message seems crystal clear. Don't wait for someday to think about your business valuation.
Absolutely not. Start today.
Start measuring it now.
Yes. If you want sustainable growth, if you want more freedom, more options in how you run your business, if you want to build a real legacy, then understanding and actively managing your business value isn't just nice to have, it's essential.
And for anyone listening who's thinking, okay, I'm convinced, where do I start? There was that resource mentioned.
Ah, yes. Measure.valuecreationengines.com. It's a good place to get going.
Good starting point.
Definitely. Because, your regular financials, your P&L, your cash flow, they tell you about the past, what you've earned. But your valuation, that tells you about your current worth. And, crucially, it acts like a compass. It shows you the direction you're heading.
That's a great way to put it. Okay, so final thought for everyone listening. Think about just one specific area in your business right now. Where could understanding its impact on your overall valuation lead to an immediate positive change? What's that one lever you could start pulling today? Thanks for taking this deep dive with us.